Hey, everybody. It's your boy, Sean McLaughlin at Options Sean on the old Twitter X. Hope you guys are doing well. Today is Thursday, July 24, 2025. In case you didn't know, it's a bull market. Might, some of your positions might not feel like it today. I certainly have some positions that are pulling back on me a little bit today, but it's still a bull market. And we don't go up straight up every day, that's for sure. But hey, let's start off with some charts. One of the things that we do here is we talk about the high level, what's going on in the market, things of interest. I like to give you my thoughts on what I'm getting, what my feel is for the market. And then, of course, in the All-Star Options session, All-Star Options Jam session, we review any exits or adjustments we've made to existing positions. We'll get into that. We're going to update some stops. We got a bunch of positions that continue to work, and we're going to update our stops. And we'll review some of the new trades we've put on since we last spoke last week. But I want to start with the VIX chart here. Gene, if you want to pull up my screen. We are making new lows on VIX, levels we haven't seen since early this year, back in January and February, and we're about to go even lower, I think. VIX has a 15 handle on it right now, about to get into the 14s, it looks like. And I'm bringing this up because one thing we talk about a lot here with when it comes to volatility, whether it's implied volatility or VIX as the volatility gauge, one thing we talk about a lot is mean reversion with volatility, right? Mean reversion, meaning when volatility is high, it tends to come back down, and when volatility is low, it tends to rise. Now, it's not equal on both sides of that equation. Let me explain what I'm talking about. When we have spikes in VIX, like when we had this spike in December, on December 18th, we had a big spike. We had another, steady rise over 2 weeks in early March. Then we had a big spike around the tariff temper tantrums back in early April. You'll notice that every time we have a big spike, a noticeable spike, we come back down pretty quickly, pretty aggressively. That's mean reversion, right? And why does that happen? Well, these spikes tend to happen because people are scared about something. There's either some new information in the market or there's some uncertainty in the market. Whatever it is that scares people, that fear tends to either go away or the fear becomes the new normal, meaning, okay, this is the way the world is now, and we're humans and we're going to adapt to that. So when we adapt to things, especially in terms of financial things, the prices kind of get priced in, and then the uncertainty and the fear goes out, at least in the financial terms, because now this is the new normal. We're used to it. Okay. So now I'm not scared about the next thing because I'm like, this is the way I'm living now. All right. So that's why volatility, when it spikes higher, tends to come back pretty quickly. Now, the flip side of that coin is just because volatility is low doesn't mean we're going to mean revert higher anytime soon. That's not just not how it works with volatility. So I'm bringing that up because I know that we're making new lows here in VIX, and I don't want that to be a signal to some of you to say, oh, well, if we're making new lows in VIX, then it's only a matter of time before it turns around and we have another spike. Sure, that could happen. That might happen, but that's not the bet I'm willing to make. I don't want to make mean reversion bets on volatility rising. Now, what I will do is when volatility is low like this, I will tend to favor positions that I could put on, options positions in particular, that I'm betting on the direction. But if volatility rises, that also could potentially help my position. And that's a good side to be on. So when volatility is low, I like to be long options premium. When volatility is high, generally speaking, I tend to want to be short premium. Okay, because of the mean reversion thing. So I just wanted to bring that up because I had somebody asking me earlier about today, like, hey, VIX is making a new low. Should we be getting long volatility? And I was like, well, not necessarily. All right. Another thing I wanted to bring up here with these are some open positions here. I want to bring up MTUS. This is a no, not MTUS, MRUS, excuse me, MRUS. So this is a position we are in. We were in a July-December call calendar spread at the 65 strike. So that meant we were short the July 65 calls and long the December 65 calls. And a big reason I put this trade on is because I put this trade on in this way is because when I put this trade on back in early June, I wanted to be long the December 65 calls. But I was feeling too cheap. I didn't want to pay full price for those calls for a couple of reasons. Number one, I thought they were expensive. And number two, I had a feeling that this stock might kind of take its time making its way to 65, right? So I thought, well, why not get paid to wait? So that's why I put the calendar spread on and I sold those July 65 calls. And man, this thing just is feeling like it worked out to be textbook. These July 65 calls just expired this past Friday. So 3 trading days ago, 4 trading days ago. And now look at us. We're at 65. We're above 65 now. So those short calls would have been in the money now. And at this point, I would have been closing the call calendar spread, which would have been a profitable trade, no complaints, but it wouldn't have been the profit I'm hoping for, which is what I'm in position now to have. Is I have now I'm just long the December 65 calls because the July is expired, worthless. Now I'm left with the December 65 calls with the potential for unlimited upside. And when you have a stock trading the way it's been trading over the last 7 or 8 trading days, you love having unlimited upside. All right. So I'm just loving this trade right now. And they don't always work this way. In fact, they rarely do. But man, I love it when when a calendar spread waits just long enough for my short call to expire and then takes off. I mean, I couldn't have drawn up any better. Does this mean this thing's going to go on and trade up to $100 and be a huge winner? No, it might. It could happen. And now I'm in position to find out. I'm I've created a space and now I'm holding the space to witness greatness in this MRUS. All right. Wanted to get that out of the way. That's some good news because I don't really have any good news on recently closed positions. Both of them are losing trades. But, I wrote a piece earlier this week. You guys probably got it in my free email. By the way, if you're not getting my free options newsletter, the link is in the chat there right at the top, free options newsletter. Please click on that link and give it a go. You might enjoy it. And this week I talked about, oh, excuse me, I got a call coming in. Let me turn that off. This week I talked about how, in a bull market like this where so many things are working, we can't possibly trade them all. But the way we stay involved and the way we stay active is we just keep trimming the losers and rotating that capital into trades that are working. That's all you can do. And think about the S&P 500. The S&P 500 is the world's greatest trend following strategy. Why? Because on a regular basis, I don't know if it's quarterly or semi-annually or annually, but every so often they rebalance or they reshuffle the deck, right? They kick out companies that are sucking, companies that just aren't doing well or just falling out of favor with the current economy, and they replace them with new companies that are more in sync with where our economy is headed, companies that represent what the U.S. is all about, what the biggest companies are all about, where the technology is going, where consumer trends are going, all that. It's basically always kicking out the worst performers and always adding better performers. Why can't we do that with our portfolios, right? We could do it on a micro level with our portfolios, just kicking out the small losers and redeploying that capital into our next new best ideas and just keep doing that and holding on to those winners. Let the winners run. Let them do what they have to do. Let them do what they can do. All right. Don't pay any attention to them. We have a plan. Stick to that plan. But the trades that aren't working, maybe it's a good idea to just prune those, especially if you need the capital to use in other trades. So with that in mind, the 2 trades that we got out of this week are just 2 trades that weren't working. And in a bull market where so much is working, if a stock isn't working, man, what else does it need? Right? If a bullish idea can't work in this tape, I don't think it's ever going to work, right? So we had 2 of them here that we exited this week. HBM, that's Hudbay Minerals. We were long the January 12.5 calls for 75 cents. Once we closed below 10, that was my signal to get out. I closed them for 60 cents. Not a terrible loss, all things considered, right? I paid 75. I'm out for 60. Not a terrible loss. I'll take those kind of losses all day long. All right, next up, Take Two. This is one we've been in for a while. We got into this trade back in mid-February. It was a call diagonal, which is basically a calendar spread with different strikes. We were short the April 240 calls and we were long the August 250 calls. Well, the April 240 calls expired worthless, and I was feeling pretty happy about that as the stock eventually started moving higher. And it was looking pretty good. It was a slower mover than I thought it would be, but nonetheless, about 3 weeks ago, I was feeling good about the way it was moving there through June. But it just ran out of steam. And my updated stop loss level was 230. We closed below it last night. So I closed this trade this morning. All I had left was the August 250 calls that I was long because those April 240s expired worthless. I paid all in, I paid 750 for it. I was able to sell these August 250 calls for $2.50. So not 100% loss, but not a total loss. Well, I mean, not a total loss. So we'll take it. This one just ran out of steam. A little bummed about this one. I had high hopes for it, but we are out of Take Two software. All right. Next up, let's update some stops. We got a few to run through. These are some big winners. QS is one of them, in no particular order here. In fact, I didn't even have a stop loss in this QS. Well, for a couple reasons, and we've talked about this in previous weeks. But when we first got into this trade back in January, I put the trade on with no stop. It was like my attitude was this is either a hero trade or a zero trade. I'm willing to risk it all, right? So I sized my position accordingly, knowing that if I'm wrong, I'm going to lose 100% of my money. And here in late May, early June, when the stock was trading in with a 4 handle, those calls were worthless. They had a zero bid, 5-cent offer. I could have bought all the calls I wanted at 5 cents. So I basically just wrote the thing off. I thought it was dead. But lo and behold, on June 25th, everything changed. I don't remember what the news was. It doesn't matter. I don't care. Everything changed on June 25th. This thing has been ripping higher. And I've been treating this thing as free money. It's been a lotto ticket, right? I mean, whatever this thing can end up being worth by August expiration, I'm happy because I had already written this thing off. It was a zero to me. So right now it feels like free money. And boy, is it turning into a great trade. However, I am changing my tune a little bit now. I am initiating a stop, which feels a mile away. I'm initiating a stop at $8. If it comes back and closes below $8 between now and August expiration, I will close the trade. I will tighten up this stop as we get into August. Once the calendar turns to August 1st, I will get more aggressive with my trailing stop, following the rules I always follow with long call trades heading into expiration month. Is that once we're getting close, I don't want to give the stock too much opportunity to take back my profits. So I'll trail a stop that generally somewhere between the recent 3 to 5 day low price. That I'll use that as my stop level, and I'll exit intraday in that situation. Of course, I'll keep you guys all updated in the chat room on that. But for now, at least until the end of the month, which is basically another week. What's today? Today's the 24th, so another week. We'll keep this stop here at $8, and then we'll start aggressively trailing starting next week. All right. So the new stop now for QuantumScape QS is $8. All right. Next up, First Majestic Silver Co. Similar trade. This is another trade where I also did not originally have a stop loss, but I am now initiating one at 775. Got this little note here where the green circle is. I closed the short calls of this call calendar spread. We were short the July 9 calls against the long December 9 calls. When the stock was coming up here, trading up here above 9, I was like, oh man, this thing's going to run before we get out of our July call. So I just started working a 5-cent bid just to see if I'd get lucky. And sure enough, it pulled back for a few days and I was able to get out for 5 cents. I mean, I could have just held them and they would have expired worthless, but that's okay. 5 cents is a small price to pay. So basically, I got into this whole trade for 84 cents. Let's add the 5 cents that I paid to cover the short. So really my net cost in this trade is now 89 cents. I'm long the December 9 calls with unlimited upside from here. In fact, I could delete this line because we don't need this anymore. But I am now initiating a stop at 775. I don't want to see AG come back and fill this gap. That would be a bearish development for my trade. All right. AG 775. Moving on. MRUS. We've already talked about this stock, but one thing I didn't mention before is that this is an updated stop here at 52. 52 is the new stop for MRUS. Hope to be raising this stop aggressively as the stock keeps moving. But for now, 52 is our line in the sand for our December 65 calls. Okay, next up, Lemonade, LMND. We're long a September bull call spread. We're long the 45 calls and short the 60 calls against it. Got into this trade here back in mid-June. It's kind of going sideways. Well, it's not kind of. It is going sideways right now. It's not. It's taken longer than I hoped it would, and I'm really hoping this thing gets moving soon. But I'm going to raise my stop up to 37 now. I don't want to see it break what appears to be a pretty significant support level, not also including the rising 50-period moving average. And this yellow line is the anchored VWAP off of the April 7th lows. So if we get below 37, to me, that's a pretty convincing argument that the trend I'm looking for is not developing. So I will close this trade below 37. All right, next up, Rigetti, the Rigetti Computing Company, or Inc., RGTI. So far, this is a trade. This is something that I don't do often. It's a little different than I normally do, but with a bull call spread, I actually sold half of the position. This was all laid out in the blog post, and when they put this trade on, this was the plan going in, that if Rigetti got to 15 bucks, then I would sell half of my bull call spread. I did that right here on July 16th. When we pierced 15 intraday, I sold half of my position. So we paid 240 for this bull call spread. Sold half of it for 430. Basically, not quite, but pretty close, paying me back for all of my original investments. So for all intents and purposes, we'll just consider the other half as a free ride. We have up to the 25 strike. If Rigetti gets to 25, God willing, between now and January, that's when I'll look to take profits on this trade. But so far, I mean, I like the way this is holding up after that recent breakout. Let's see if we can follow through. Last up, Galaxy. Man, what a run we've had in this thing so far. I don't want to jinx it. I'm hoping we can continue riding this thing through the galaxy, around the Milky Way, everywhere, right? Let's keep this thing going. We're long the October 25 calls. I'm now raising my stop to 24, which feels a mile away right here, but we've had quite a run. It would not surprise me at all to see this thing pull back into the mid 20s before possibly setting up again. But for now, 24 is my stop. And if we get stopped out at 24, we'll still probably have a profit there, depending on how and when it happens. But boy, this trade is off to a great start. Let's go Galaxy. All right, so that's it for all the updated stops. Lastly, actually, no, let's do this. Instead of going out of order, let's just do this. Here's the updated stops. We just talked about them. If you need to take a screenshot, please do. That's all 6 of them. You could pause the video if you need to. I'll be right here. I'll be right here. All right, you got your screenshot? Good. Let's go back to the charts here. Now let's talk about new trades that we've put on. Why can't I can't read my stuff. We've got 3 new trades that we've put on since we last spoke. Here's one in LHX. And by the way, guys, if you're watching this for the first time or if you're unfamiliar, all these new trades and every trade that we put out at All Star Options, there's a detailed blog post that tells you everything about the trade, why I like the setup, what option strategy I'm using to participate, where I'm managing risk, where I may stop out, where I may take profits, where I may take a partial position. All those details are all laid out in the blog posts so that you have everything you need to manage the trade. You could do what I do, you could do your own thing, but either way, you got all the details. It's all laid out there for you. So I don't have the trade details on these charts for that reason. You can find them at allstarcharts.com. Head to the members section, head to the All-Star Options section, and you'll find all the detailed trade plans. If you don't have access to All-Star Options, the link's in the chat there. Subscribe to All-Star Options. It's the second link I shared. Hit that link and subscribe to All-Star Options. Join the community. We got a great community. We got an online chat room. Everyone chats throughout the day. I'm not the only one sharing ideas in there. We got other people who are members who are sharing great ideas. Had some really great or a meme stock calendar spread trade that one of the other guys brought to the attention of the group a few days ago, and it paid out, and they made money yesterday. Awesome. And so those kinds of things happen in the All-Star Options chat room. You should join us if you're not here. So anyway, LXH. This is one of the new positions we put on this week. It's off to a great start. I love new positions that start out great. That's always a good sign. So we're long LHX. Ralph Lauren, another stock that we got long using options, also off to a good start. Still has some more work to do, of course, but you know, early returns are encouraging, that's for sure. And finally, Hut, a miner. Boy, I have been snake bitten with the Bitcoin miners. But when I see a good setup, I got to keep going back to the well. And one of these times, these Bitcoin miners are going to pay off. And is Hut going to be the one? We will see. We got long Hut. We'll see what happens. All right, guys. I think that's all I got for you. Here's all the links again. For if you want to subscribe to All Star Options, please do. Get the free newsletter I write most days. And if you like the charts that I share, trendspider.com is giving promotional discounts using my promo code Sean50. You get 50% off a subscription plan to TrendSpider. Tell them Sean sent you. And at the bottom there, if you have any questions at all for me, shoot me an email, info@allstarcharts.com. It'll get routed to me, and I'll be happy to help you in any way I can. All right, folks, have a great rest of your week. Programming note for the next couple of weeks. And Gene, this is also for you who's working behind the scenes. We're not going to be able to do the jam session the next 2 Thursdays. They're both going to be travel days for me. Going back to the hometown, homeland, visiting family, doing that whole thing. And so the next 2 Thursdays will both be travel days. Tomorrow, next Thursday is when I leave, and then the following Thursday is when I come back. So we'll figure it out. I think next week we'll try to do the options jam session maybe on Wednesday. And the week after that, maybe we'll do it on Friday, but I'll keep you guys all up to date on all that. So I'll see you when I see you. Well, I'll certainly see you next week on the What Are My Options show next Tuesday. You should definitely tune into that. That's where you guys can ask me live questions about any trades you have, any ideas about, any charts you're looking at that you think look pretty cool and you're interested in what I would do as an options trader. You can ask me questions. We'll walk through how I put together options trades, and it's fun. If you haven't checked it out yet, come on, check it out. It's a new concept. We've done a few shows now. And so far, a lot of people are tuning in and having a great time. So do that. All right, guys, have a great weekend. I'll talk to you next week. Bye-bye.